If you've been watching pre-market prep long enough, you know it's all about finding catalysts for stocks. Beaten down stocks, left for dead. No one cares about the worst looking chart in the world. I think you know what stock I'm talking about. It's a 13F, and that doesn't mean Friday. It means what the big boys are doing, and they're moving some stocks on pre-market prep. Let's get on with the show. We got a lot to cover.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning. Green on the screen, 9.5 handles to the green, right at 6,500. That's for you, Brent. You love those round numbers. The buck still under pressure, down 37 cents, 97.73. TLT pretty flat at 87.10. USO good for inflation, down 40 cents, 73.34. Gold just kind of hanging out. GLD up 68 cents, 307.93. Silver back under 35. SLV down 16 cents, going the opposite way, 34.34. Bitcoin, you can't keep Bitcoin down. Yesterday down 5K, today up 1,200 at 119,600. You talk about a busy Thursday afternoon, folks. Huh. Boy, oh boy, Triple D.
Yeah,
I heard you guys, man. I want to subscribe to the stock trading.
I brought the Brentster into this conversation here too, because nobody covered those 13Fs better than the Brentster there. He's obviously got the decade of experience working the Benzinga news desk, and he was breaking it down, and he was all over the Buffett 13F. You were breaking positions before anyone. Now, the algos were all over the UNH and the Nucor, but you got the little ones there. You broke the ALLE, the LAMR. They hadn't even moved yet. So I actually got to trade off the ALLE because of you. The UNH was good. I mean, it was a fun 13F. I'd say 13F Friday because it's 13F Friday today, but it was a fun 13F Thursday. So much going on. So, Brentster, how do you do it, man? Like, how do you get in there? Talk about your process here, because when you got like dozens of 13Fs just flying at you there, talk about your process of like going through them and, you know, how you actually drop the Buffett position so quickly.
Well, you gave me a really good reminder earlier in the week when we remembered that it was 13F season. 13F season is always 45 days after the end of a quarter. So we knew that it was going to be this week. We weren't sure if it was going to be last night or tonight. You gave me the nice heads up. I went to the SEC Edgar website. I pulled up Buffett's last 13F from the previous quarter. And whenever we first started hearing that Buffett's 13F was out, I went to the Edgar website. I pulled up the new 13F. I had an idea the positions that he already had because I looked at his prior 13F a few times. But I mean, it's a little bit of manual work. You can't do this manual work with all the 13Fs because some funds have so many positions, but like Buffett, he had like 30 positions, 25, 30 positions sort of things. So I reviewed the first one. I went to the second one. I was like, Allegion, this is not one. Lamar, I didn't see this one either. Lennar was a little different. DR Horton was a new position also. I'm just doing manual comparison. I had both 13Fs up here. I knew this was the prior one. I knew this was the new one. I basically just went through line by line and spit them out to the STN room.
Yeah, a couple of the smaller ones I challenged you on because I was like, LAMR. I'm like, it's not moving. I'm like, are you sure? He's like, I'm sure. And then, you know, they were reporting Lennar's new position. You're like, it's actually not a new position. It was a change of like share class position, which made it look like a new position, correct? So it was a lot of fun. It was a lot of fun covering it. We got to give a shout out to Adam in the STN room because we were speculating. We knew that Buffett's 13F was likely to drop, and we were talking about it at 350. You know, like, do we want to take some chances here? There was speculation from the markets that it was going to be Caterpillar, and I was like, I don't think it's going to be Caterpillar because Caterpillar really wasn't beat up that bad, you know, back to April. Yeah, it was down, but there was so many other stocks that were down as well. and its run so far. I really didn't think it was Caterpillar. There was other speculation. The chat was throwing out like UPS, a bunch of other names as well. I tried UPS, and then Adam threw out UNH, and I was like, oh, that's a good one. I'm like, it could be UNH. So I took a position UNH. I know, Adam, you took a position UNH as well right before the close. So I tried I tried Lululemon and UPS and UNH, just thinking, maybe you hit one. And then bang, we hit UNH. So congrats to everybody in the room that made money on that. I know Adam took 20 points off of it. I sold a little bit too soon. I sold 3 different times. I took, I think, 15 points. Then I took like 20 points, and I took like 25 out of the last piece, but the last piece was the smallest. But it was a lot of fun, man. The UNH was really fun. And, trading the 13Fs obviously is a lot of fun there too. So, appreciate the help, Brentster. Appreciate the chat.
Of course.
Good ideas. What was interesting too is, so we can talk the other positions as well. Nucor, which I actually own in my long-term account. So I got, boom, bonus with NUE. That's a new position as well. It's funny because we were talking about that secret position, and they were talking about it. What is it going to be? What is it going to be? CNBC actually informing us that UNH was not the secret position back from May. It was actually Nucor, DHI, and the new position Lennar. So it was 3 secret positions. It was not UNH, which was a more recent purchase. Because I was going to say, if he was buying UNH back in April or May, he'd be down in it significantly. But that doesn't seem to be the case. They're saying UNH was a more recent purchase. So it was the Nucor, I think, was the one that was one of the major secret positions. And obviously, that's had a big pop here this morning too. So big pops from the 13Fs.
Just going back to UNH for a sec too. I think it's interesting because, Dennis, wasn't UNH like the lead? Like, it was kind of the dream list stock, right? So I think there was already a little premium in UNH as very speculative being the secret position. Do you agree, Dennis?
I think a lot of people were speculating that it was going to be UNH. So I don't think it was, and I think even the run up in the last few days may have been people anticipating that maybe Buffett's going to buy some, because look at what UNH has done in the last 5 days. 239 back on the 8th, and then going up every single day. Now, again, value trading has come back into favor in the last few days. So a little bit is that value market. But when we're looking here at UNH itself, I mean, it was a pretty big move the last few days. So I think there was a little bit of speculation, maybe, that he could take a position in it, because we knew we were going to get it. It was like they're due on the Friday, but usually they drop on the day before, because they do 45 days out. So we kind of knew it was going to be Buffett, that dropping the 13F, and we knew he was going to take some new stakes. I didn't know he was going to take 6 new stakes. So the new stakes for Buffett, just to recap: UNH, Nucor, DHI, Lennar, LAMR, and ALLE. So the smaller ones, like ALLE, is a foreign company, so it doesn't move as much. LAMR was up a little bit there, but the big moves happening here in UNH, Nucor, DHI, and Lennar. And UNH really moving because it wasn't only Buffett that took a new stake. It was actually Michael Burry took a new stake in it too. So you get the double vote of confidence. And Michael Burry don't buy a lot of stocks. He did really well with the EL. So I think people were following him too.
And Dennis, we were watching all of this price action unfold about these new positions, but also Buffett got like the entire healthcare space moving, got a lot of the home builders moving too. And like me, as like, an American who's dealing with stuff like everybody else right now, I'm like, yes, Buffett is back. He's making a play on home builders. He's making a play on healthcare. It made me feel like a little more comfortable about our maybe economic position also.
But talking about rotation, right?
Yeah.
And out of the IPOs and some of these high flyers, you look at Circle and CoreWeave, Circle doing offering, and you talk about the value trade potentially coming back. Very mixed picture on the economic data this week. The CPI versus the PPI, but as I said, in the intro, catalyst, and we're talking about the value sector. So interesting day. There's too many of these to go over to do all the levels on. I can do that in the STN room. But as you guys well know, I'd like to keep a high on the pre-market levels.
So Michael Burry also taking a position in Lululemon, which I actually bought for the long-term account yesterday. We set this up in the STN room. I was just looking and saying, look, we were selling off yesterday because of the PPI. Some of the value names that were coming back into favor the last week really sold off hard because obviously they were rallying on the CPI, and then PPI is hot, and those are the names that get hit the hardest. But I was like, I think this could be a dip to buy. And I was kind of feeling like the Lululemon low might be in. So what I did was set up, I bought it at 194, and then I was talking about, stopping out under 185. And I think that's what I will do. It's up 4 or 5 points now from where I bought it because Michael Burry disclosed the position. So Lululemon having a pretty good morning. Michael Burry also bought REGN, and that's trading up 4 points here in the pre-market too. So 3 new positions for Michael Burry. People were asking what other 13Fs will move stocks. Typically, it's mainly the Buffett one. Like years ago, Brent Stern, if you're still there, coming to this conversation. Years ago, we'd be going to the Icon, the Ackman, they were all moving. It's like the algos have just taken over the Buffett one, and it's like the one that really matters now. And a lot of the other ones are nothing burgers. So you're getting hundreds of these 13Fs. Don't get lost in them. There's Buffett's number one. Sometimes people look at Ackman. Ackman took a new position in Amazon. It's up a little bit here. But Buffett, by far is the big mover. But I'm saying Michael Burry might be sneaking up as a number 2 here now because he is very, convicted when he makes it. I sold all my stocks and bought Estee Lauder last quarter. That moved Estee Lauder. And now he sold part of his Estee Lauder and bought UNH, Lululemon, and REGN. I mean, they're all up here. So Michael Burry definitely moving some stocks this morning.
Dennis following real quick on Lululemon, Brett, and I'll let you go. Dennis following the golden rule of tactical analysis. Sell the top of the page and buy the bottom of the page. Go ahead, Brad. Sorry to interrupt you.
Oh, no, it's okay. I was just going to say, and to Dennis's point about how, the trading happens around 13F season, the thing that I would say is, yes, you're going to get some trading opportunities around 13F season, but I think the way that you can use this information is if you're a long-term investor or a swing trader and you want to know the other big traders that are in a position, like fundamentally, like for business implications, I think this is a good way to do it. Like, if you own Lululemon, you want to know the top 5 big notable high profile investors to give you a little confidence. But past that, I think, 13F unfortunately has kind of like, besides a couple trading opportunities, has kind of gone the way of the past a little bit.
Lots of other stocks moving. One interesting one here, it's just also moving, I believe, off of 13F is Open Door Technologies. It's starting to move up here again this morning. We know Eric Jackson's been moving this stock here. Obviously, retail all over this one. It's already traded 20 million shares. Paul Tudor Jones took a position in it. And I think that wasn't on anybody's radar here. So I think you're getting a little bit more of a lift here this morning because you get Paul Tudor Jones taking a position in this. And maybe people are thinking, hey, maybe this company is actually for real. Maybe this just isn't, one of those pump trades here. Maybe there actually is something to this. So OPEN trading up, 7.5% here this morning. Was up a little bit further. It's come back in a little bit here, but it's showing life again. I mean, the earnings were disappointed. The stock pulled down for a couple of days, but this retail army that's behind this Open Door kind of feels a little bit like GameStop all over again.
Popped over 340, came down, had a couple gaps to fill, just over 340. And, we're talking about the stocks. We're talking about the price action now. But the thing that you got to keep in the back of your mind here, these are long-term positions. These guys are looking for long-term gains in this. So, Dennis's trading style, the way it is, he wants to maximize the profits in the day. He also added it to his long-term portfolio. So it's it's a double gain. But just, keep that in mind. And it's just, he had all that cash, markets at all-time highs. People were waiting on this. Are these Warren's, Warren's calls? Are these Greg Abel's calls? We don't know. Did he sell anything? I mean, this Oxy, he's got to be like dying on this Oxy. And he did sell a little bit of Apple, right?
He sold like 20 million Apple shares, but I mean, he still has a massive position. So it sounds like a big number. He sold a few things and he liquidated positions in a couple things. I could go find that. I don't have that ready for us right now. I could go find it if you really want, Joel.
No. I mean, people don't care as much about the sells, and we got too much other covered today, though. But yeah, if you have it in the back, we could talk about it in the
They
ST.
never care about the sells. They don't care about the sells on insider buys. They don't care about the sells. They're just like, and they think, and it used to be the case that actually stocks would sell off when, Buffett, if he like eliminates a position, they might care a little bit. But I mean, we've known that he's been selling Apple for a very long time, and he's been lightening it up. It got very big in his portfolio and he's been moving on to bigger and better and greener pastures here. And he's been lightening up Apple. So, but again, Buffett holding true to himself. Think about these positions that he just take, with Nucor, lower PE name, steel company, easy to understand, home builders, lower PE names, building homes, easy to understand. He always says, if you don't understand the company, don't invest in it. So, he's not getting into crazy technology companies because he's 94 years old. He doesn't understand. I don't understand what half these crazy technology companies do. So, but UNH, easy to understand as well. Also, UNH, not to be outdone here, is Citron. Citron coming this morning and
Oh yeah,
pumping
that's right.
UNH
That was the other
as well.
person.
Andrew left, pumping UNH as well. So you got the three people. You got Buffett taking a stake, Burry taking a stake. And I don't know, Citron's long, but they're talking it up here this morning too. So lots of love for UNH this morning. Question, Joel, just back to UNH because it's the big one that everybody's talking about this morning. Is this move for real? Is it sustainable? Is it the vote of confidence that this stock needed to get us back to 350, 400? Or is the story still like, What are your thoughts?
It's a fundamental question, Dennis, that will only be answered by the regulators, right? We had the unfortunate incident that happened in New York City that took a haircut off the stock then, and then you had way out ahead of it. You had I can't remember Brent. Maybe you could tell me the source. Breaking the news. There's an investigation going on. The legal team over at Berkshire Hathaway did their homework. They, probably spent thousands of dollars researching, and who knows what the exact lawsuit is. We do have some detail on it, but that's it. But the unfortunate thing is that when these stocks go down like this, like even if they were totally cleared of everything, like is it going back to $600? I mean, really hard to say. So wait for
it's a
development.
long ways back. When a stock falls 50%, it's got to go up 100% to get back to even. So, I mean, there's a lot of bag holders. It's still bag holder central. And that's the talk with all the value names here. Because let's be honest, we've been in this growth tech market here for a very long time, and value has been completely forgotten. Now, with the light CPI on Tuesday, value started to catch some steam. That, got hit yesterday because of the hot PPI number. But I mean, you sit here and think, could there be a value catch-up trade? I mean, that's the ultimate question here. And maybe we got to look at Berk.B itself, because Berk.B, which is the ultimate value stock, is climbing back here the last week and a half. So showing some life, after it was showing a lot of death here earlier. But value has just been the place where money has gone to die, really, in the last year. Even the last few years, you could say that. Majorly underperforming. But value is showing some life. Is the value rally for real? Talking, to the chat here. Let's figure it out. I think it could have more than a day of legs, but these are big pops. I don't think I'm chasing UNH up 11% here this morning. I don't think I'm chasing Nucor, which I already own, up at 152 here this morning. I don't know if I'm coming in to DHI and the home builders and saying, yeah, now is the time because Buffett is in. I mean, DHI's kind of had a big move already. Like, we have already probably anticipating lower rates. DHI was $120 2 months ago. It's 167. So, I mean, you want to talk about the comeback trail. DHI has already kind of had a big comeback here. So I don't know if we want to chase these Buffett moves.
I mean, there's always check back, right? I mean, the thing about Lennar and DHI, it doesn't have the legal overhang, right? That's the wild card with UNH. But Lennar, I mean, lower interest rates, economy still going pretty well. No recession, depends who you're talking to. And I think also these home builders, I think they learned a lot in the housing crisis, right? Oversupply. and whatnot, and getting too far ahead of yourselves. So, they learned the hard way during the financial crisis. Just real quick before we get doing a lot on this, before we move on, I mean, does this make you look at Centene or CVS or some of the CVS?
The market is igniting all the beaten up healthcare names. I mean, the ETF for that, which isn't widely traded, but it gets some volume, is IHF if you want to just look directly at the healthcare provider. And it is trading up 4% here today. The XLV, which is loaded with drug stocks, is up about 1%. It does have UNH, and I think UNH is around 5 or 6%, but the biggest component in the UNH is in the XLV is Lilly. So it's got a lot of drug stocks and a lot of other stuff, but that's up 1% here today too. So, this has been really beaten up trade. I mean, these stocks are all, the multiples on these stocks are a joke. I mean, we've looked at some of these before, like Merck trading 7 times earnings, Pfizer 7 times earnings. They absolutely hate all these stocks, but they make a lot of money. So, I mean, value investors have been in here for a while. If the Momo guys get in here, like all of a sudden these things got momentum, that's where it goes. Because let's be honest, when we really talk about this market, it's the Momo guys and girls that drive price. The bots are all over it too. But when that momentum starts going and they start getting above, their moving averages, and I'm not a big moving average fan, but we know when the Momo guys take over, that's what really drives price. Value investors never drive price because they're like, they're always contrarian. They're always buying in the gutter. Warren Buffett just sitting around waiting for the story to eventually come around and waiting for, the value to be, there for, to come in. But I mean, we've got stocks trading 150 times earnings, and you got stocks like Merck trading 7 times earnings. I mean, there's just no story. If there's no story, nobody seems to gravitate or give a crap about it. Like, I mean, what ETF is launching and saying, hey, we got the cool stories. We're going to put in all these old 7p drug stocks here. Nobody's buying that ETF, so they don't launch those ones. And really, when you look at the markets, and we've talked to Tim Quast about this before, ETFs are what drives price. When you get, new ETFs launching all the time, that's what really drives price. It's why stocks go up when they get added to the S&P. Twilio added to the 400 last night. It's a good segue into here. Twilio trading up 4.5%. Why? Because when you get into the S&P 400, there's other tracking stocks, other ETFs that are going to come and buy it, other institutional money managers that maybe invest and follow. So it's jumping into the 400 here this morning, and it's trading up 4.6%. ETF, additions, subtractions, but ETFs drive price. ETF effects are real, folks.
You know what? We'll just go back to the drug stocks real quick. Who's been the standout, Dennis? And I can remember you talking about this stock and like a value stock, Gilead.
Yeah.
Yeah.
At 70, it was kind of a no-brainer. Like, I mean, it had gotten down so low. And the worst thing they ever did was, what did they fix? Like, they came out with a drug that cured. What was it? Which was Hep C? What did they cure? They cured something. The drug companies have learned the hard ways from Gilead. Don't come up with the drug that actually cures the disease, because you give them the cure and then you can't sell anything more. And I mean, that's a terrible thing to say, and it's a terrible way we are. But they like to come out with drugs that manage the disease. A lot of companies come out with the management, because when you come out with Gilead, they got beat up for a long time because, they came out with that drug, which is unbelievable. I mean, you come out with a drug that actually cures a disease. It was Hep C back in 2012. And, the stock went into the complete gutter, for a long time because, okay, well, you take the cure and then what now? We have no more revenue. So I think companies, learning, that it's better to manage the disease and cure the disease, which sucks for humanity. But I mean, that's corporate America, corporate North America, corporate world. I mean, that's where we're at.
A little bit of a leak in the S&Ps, nothing much. New all-time closing high yesterday. Boy, they tagged the market in the final few minutes yesterday, Dennis. But once again, came back. Market came back up 5.25 handles.
Lots of stocks reporting last night, but before we get to the earnings reports, we got one more big one to mention here, which we haven't mentioned, and Intel. It was a good night for me in my long-term portfolio because I own Nucor. I had UNH on for the trade thanks to Adam in the STN room. And then Intel, which obviously I took the position on last week at 2079 in the STN room. And my reasoning was, I'm like, you had a meeting at the White House. They're probably going to be some type of announcement. Now, there's no official announcement here yet, White House or anything. But rumors have it that the U.S. government may actually take a stake in Intel, which is a crazy rumor. They did this with MP Materials, and we're seeing this more now from this Trump administration here. But I mean, this is big moves for Intel here. It was trading up yesterday on this news when it broke just before the market closed, so it's already kind of a lot of it priced in. We thought about, we talked about it 25 going to be major resistance. That's what's happened overnight. It ran a major resistance at 25. But I mean, is there more gas in the tank? Is there an official announcement to come? There's been no comments from Intel or the U.S. government officially here. Right now, it's just rumors, but Intel has been ignited here. Nice to see this Intel trade work out.
Where was this? Those prints over 25. Was that on Robinhood, Dennis, or were they
Maybe?
Actually? Yeah, take
probably.
place this morning. I see a print here at 25 and a quarter. So there you go. That's the pre-market high. I mean, if you bought it for the trade, if you bought it for this catalyst, you got the catalyst. The only thing you just got to keep in mind is, well, we're going to discuss it. Or Trump's like, I really don't like that deal. But does this make the company better? I mean, they still need to make better chips, right? They still need to catch up. So Funema, maybe they can hire some new talent, something, but a nice move over the last couple days in Intel. Intel, maybe they'll change the symbol or something to USIN.
U.S. Intel.
Yeah, U.S. Intel. Dennis, when I ask you,
I don't know. Like, people ask me, what am I going to do with the position? Because I talked about a potential for like a 10 or 15% move on an announcement. Well, I bought at 2070. We're already up like 17, 18% on this in literally 4 days. So do you ring the register on half? I was like, at 25, maybe you ring the register on half. But I think there could be this could ignite it. Like, there's a case here where if they actually do come out with an announcement, if Trump gets behind Intel. We saw what happened with Apple. It didn't just end on day one. It went for 3 days in a row. So, I mean, there's a case for Intel to be like a $30 stock if Trump gets fully behind Intel. I mean, nobody's more influential in this market than Trump. That's the bottom line. He comes in, mentions the pot sector explodes 70%. He comes in, mentions, Apple explodes and has its best move, ever since an earnings report. It's just an unbelievable move in 3 days. So Trump's hugely influential. So you can't get better than having Trump behind you. And I mean, think about the story here. Intel, American company, trying to produce chips over here. I mean, it kind of all makes sense. So I'm not that excited to just dump my position here after, one rumor here. I think there could be more gas in the tank for Intel here. And I think it could eventually see 30.
All right. 2 minutes. Actually, less than 2 minutes, a minute and a half.
We got a great show coming for CC. Lagator is in the back room. As soon as we get, obviously, the retail sales numbers here, we're going to go to CC and break down the options, because it is options expiration here too. It wasn't just 13F Friday here. It's options expiration here again. So far, imbalances are to the sell side pretty massively, actually. 500,000 to sell on AT&T, just cherry picking a few. ExxonMobil 300,000 to sell, Oracle 100,000. So they're always big, but they flip around. Sometimes these big institutions going the other way. UNH 400,000 to buy. So if you're looking at that one, that one's going to be buy imbalance here this morning. So some big moves here. Brent's just going to break us in with the retail sales. Then we're going to get Lagator.
Yeah. Dennis, you got 50 seconds.
Can you preview for us, Brentster?
Yep. Preview for, we're going to get the retail sales for July.
Do you think it's going to be market moving?
Core retail sales, we're expecting a 0.3% gain. Import prices, we're expected a 0.1% gain. Export prices, we're expecting also 0.1% gain. The base retail sales figure, we're looking for up 0.6%. We got about 20 seconds here. Do I think it could be market moving? Probably not, but retail sales isn't the worst data point we have. It's notable. We should tune into it. We should be aware of it. 10 seconds here, folks.
The algos are getting it right now. The high-speed freaks are getting it momentarily here.
Import prices up 0.4%. That is higher than the 0.1. Retail sales a miss, 0.5% gain versus a 0.6% of a percent gain. The core retail sales figure was right in line, up 0.3. Market ticking just a little bit higher here.
Yeah.
We also got the New York Empire State Manufacturing Index, which was a strong reading. This was for the month of August already. 11.9 was the index reading. Economists were actually looking for a decline in the reading. So at least in the state of New York, Manufacturing Index looking a little bit better. Kind of just like a little chop around, but we did move a few points higher here in S&P 500 futures.
Pretty much nothing, Berger. You dropped many people looking for the market 90-50, did not get it. Now just they bought the dip. I mean, what else? We'll see how it remains during the day. All-time closing high is my focus number right now, 90-50. Barely traded that below in the pre-market, but nothing to deter the bull as we speak. We'll see how things shake out in the for the remainder of the day. But right now, still maintain almost exactly where we were at before the number. But options expiration, and who else would you want to have on for options expiration than CC Lagator? CC Lagator, were you the first person to come up with AI, options AI?
We were super early. Yeah. And like half of it was, obviously having options.com would have been pretty epic, but options AI was available back then. We took AI and, the early version of that was, having an assistant that was AI. And that's what we always saw ourselves as.
Okay. All right. So we can bring your charts up here in a second, but we're seeing a lot of volatility in stocks, right?
Yeah.
Individual stocks, but the indexes are kind of muted. Why no fear in this market?
Yeah, that's like even watching, the first half an hour of the show today, talking about the moves in UNH, talking about the, moves in Lulu, Intel. I don't know. I can't remember a market that was this volatile ticker to ticker every day that was not showing up in the indices at all. And you typically see this into an earnings season, right? And I I've been on the STN and we've been talking about this the last couple of weeks. You go into an earnings season, a lot of times you won't see volatility in the indices, but you will obviously day to day see idiosyncratic moves within, the company's reporting. This season has been, to me, really crazy under the surface because on top of that, you have, what you all were just talking about, like a CEO visiting the White House, or you have all this extra layer with like the tariffs and kind of this what's going on with like the DC aspect of this market. And I've never seen a market more volatile under the surface and not showing up in the indices. So the SPX right now and I would say everything but IWM is basically at the lows of the year as far as volatility. IWM, the last, I would say 2 weeks, the options market is expecting a lot of volatility, and we are seeing it in the small caps. And you guys were getting to this a little bit earlier in the show with like some of the rotations we're seeing day to day. But if you look at the market, like even the last 2 weeks, you'll get these, gaps higher in the morning, they make it sold off. The buy the dip thing still works, right? And that's happening at the index level. But then you're seeing, as you were saying earlier, a circle just go down every day. A CoreWeave miss earnings. I mean, we've seen some massive earnings moves. You see the UNH move this morning. So it's sort of a fascinating market. And I don't have a great historical comparison actually. And at the index level, I mean, this could continue, and it could be for a couple of weeks. The next thing kind of on the options traders radar is that week of Jackson Hole and Nvidia earnings. But even that, like the market at the index level is not expecting much volatility.
Yeah, let's just talk about it. We can bring your charts to the stage here. You are I got to remove my charts. I'm going to throw yours up. So you are expecting a quiet Friday. I've been noticing with my analysis, I keep an eye on the 9-day average trading range and get to those points where it's 150, 200 handles a day, and then we start to calm down. Now I believe it's around 60 handles a day, and
Yeah.
a lot of that range takes place overnight. It doesn't
Oh,
even
yeah.
take place during the regular session. So talk about your setups for today and try and predict some of the price action.
Yeah, well, I would say the overnight expected move in SPX is actually, like, you see this right here, it's actually less than 0.4%, which I can't remember an expected move for a daily expected move less than this. You might have to go back to February. And basically what the market is pricing here, especially on an expiration Friday, because all of the effects of compressed volatility. So when you start to see the VIX go from, even like a week or two ago when we got up to, closer to 19, let's say, and then you see it compress really quickly and you're down near 15, that has it basically acts like a governor on the market, and it starts to compress the possibility of moves too, because the market goes to move and it runs into all of these options that have just recently been sold. And that effect accelerates into expiration. And so today it's like the SPX for CPI, I'll just give an example. The SPX expected move for Tuesday was 0.8%. Today is 0.4%. And even yesterday into PPI was only like 0.5%. So it was as if once CPI happened, we got that move. It was sort of like traders were like, all right, we're done for the week. We're back into summer mode. We don't care what the PPI print is. We're kind of done for the week. And we're probably going to grind higher, drift higher in a very low environment into SPX. And that got tested yesterday with PPI, and we went right back to it. We finished like almost exactly unchanged on the SPX yesterday, despite that PPI number. And that will last into this afternoon. It would take like a pretty big news story to disrupt this market today. And, just for instance, so the SPX to the upside is pricing in about 64.95, let's call it. So basically 6,500. And then to the downside, it's basically pricing in 64.40, 64.50. So that's the kind of range the options market is looking at today, which is basically nothing. And it's essentially a pinning effect for expiration Friday.
Can you explain that? Go in a little more detail about the pinning effect.
Yeah, well, 60, the biggest open interest strikes today are 64.50, 6,500 is massive, 6,400. You tend to see that, right? And because what's happening is a lot of the institutional positioning, which is long the market, they're selling calls as it's going higher. You're running into that. That's why you often see in like a grind higher, if you just look at the SPX cash, you'll see it go 6,300, kind of pause for a day and a half, go up to 6,350, kind of pause for a day and a half, go up to 6,400. You see that all the time. And that's basically that option, all of those sold calls as you go up in, as the market grinds higher, you hit that level and there's a bunch of extra stock to be sold by the market makers that are long that call. So for instance, I can pretty much, I'd bet your money that we don't go above 6,500 today, for instance. So if the market did try to test that 6,500 level in the cash to the upside, it's going to run into a ton of overhead supply, especially today. Now, if it tried to do that on Monday or Tuesday, it might go right through it pretty successfully. But today, there's no chance.
Okay. All right.
Yeah.
So we talked about today. We talked about the week. We talked about options expiration. So let's look forward now. What are the catalysts to shake us out of this low volatility market?
Yeah, well, there's nothing on the radar right now. The options market, there's a slight uptick. This, like look at these vols, Joel. So you might be familiar with this. So as I'm hovering on this chart, I mean,
Tighter.
8.5 vol on Monday and 9 vol on Tuesday. And, it's under 10 all of next week. It sees a little bit of a spike that last week of August. And that's, Jackson Hole, that's NVIDIA earnings. But really, the options market, and this is one of those things where I think people, especially like I have to catch myself sometimes, as if the options market is all knowing and it's just going to price, NVIDIA week earnings, it's going to price like a big move in Jackson Hole and everything. It doesn't have that luxury a lot of times, because if you are buying options out the first week of September or the last week of August, or even going out into September for the Fed meeting, you don't have the luxury of sitting on those options and watching them decay every day. And then you get your move, right? Because you will have lost so much money between now and then on the decay of those options that you basically can't position when vol is this low in the market and the index volatility is the actual index volatility each day is this low. You can't look ahead and buy options, or you can, but you've got to be willing to sit through a bunch of really boring buy the dips and sell the rip days, right? Where you don't get your move. So what happens then is the options market's trying to price volatility higher for that NVIDIA Jackson Hole week. It just can't until we get closer to it. And that's kind of a lesson for how to be positioning, into year end, for instance. I would say at the index level, you have two choices. You can, let's say if you're like, I want protection, I keep wanting to participate in this move higher, but I want a little bit of protection. It's never going to get cheaper than this, right? So you could go out to December puts, let's say, and you could find some cheap puts, and you're like, I'm willing to spend this money at this very low volatility because I just kind of want that stop, right, to the downside, and I want to buy some of these names, right? And I don't want to get my face ripped off the other way if the market tanks. That's totally fine. What the rest of the market is doing is they're basically saying, we're going to have time for that downturn. It's not going to happen overnight, right? And if the market's going lower, it's most likely going to be weakening economic data. We've got a bunch of data points before that September Fed meeting, and it's like we're going to have some warning signs, right? And if that's the case, then I'll position for the downside, or then I'll hedge. So I would say if you are a short-term trader and you're trying to do a 5% pullback in 3 weeks in the market, let's say, I would say you wait until that moment, right? Because the worst thing you can do right now is buy puts because they're cheap, hoping that the market corrects in the next 2 weeks. And then it does 2 weeks from now, but the market's already 3% higher before that happens, and your puts are too far out of the money. So I would say if you're a short-term trader, just be patient. Just be patient. And by the way, no one's buying puts right now. Like it's like no one.
Is this the time? Like, isn't this the time when insurance is so cheap? Because something, some, black swan event, or macro geopolitical, or China goes invades Taiwan. Isn't this the time when you should be buying puts when it's cheap as hell?
And but you have to go out. I would say go to December. You know what I mean?
Yeah. You know what? I don't know if you're looking at the chat, CC, but we get good questions and then we get great questions.
Well, I saw everyone's talking about my hair. They have to know what time zone I'm in. So it's super early.
But you don't know what they do to Dennis, man. I mean, these guys are being easy on you, CC. You know?
I just rolled out of bed.
I'm sorry about that, boy. Okay, back to our regularly scheduled programming.
Yeah.
Jonathan Russell comes in and he's saying, and you can pull it up on your charts, he wants to look for protection for December.
Oh, yeah.
So paid up to the premium gods. Okay, what do you have for us?
Should we do like SPY, I guess?
Yeah. Is that, Jonathan, is that what you want? SPY?
Or Qs or something?
Jonathan, tell us what you want if you're still at your computer.
IWM? No.
Let's do both.
Okay, well, let's look at SPY first. So this is December 29th, and this is kind of crazy. So the VIX and like vol are two different things, but they're generally within a couple of points of each other. So if you look at SPY and SPX vol, and right now we're looking at December 29th and it's 14.5, that generally means the VIX futures out there are probably 16.5, I would guess. We could pull it up, but so what we're looking at is very low. It's essentially the equivalent of like a 16.5 VIX out to the end of the year. It might be slightly higher if somebody had the curve in front of them. What that translates to is the options market is only expecting about a 7% move into the end of the year, which is kind of crazy. If you think about what we've just been through, right? So to Dennis's point, if you were positioning for a 5 to 8% correction at some point this year, you have till the end of the year to the options market to do it. So let's just go out to December. Oh, we have a 31st too, expiration.
Sure.
So we're going to look at like bearish here. We could do, well, let's first look at like a at the money put, right? So this at the money put costs you about $20. And it breaks even at 625. When was the last time we were at 625? It was probably pretty recent. It was the beginning of August, that down week after the FOMC.
2 weeks ago.
We got down to 620, right?
Yeah.
Okay, so that means that out until year end, you could buy the at the money 645 put in SPY, and you have a break even that's $5 higher than where we were a week and a half, 2 weeks ago. Yeah. So that gives you an indication of how inexpensive vol is right now. And you could take this put. I'm not even going to show a put spread because this stuff's so cheap. So if you went down to like the 635 put, you're talking about that's actually not that good. I mean, this is one of those ones where you could do pretty close to the money, and it's just not that expensive. And what I would say here is the reason I made the joke about not even showing a put spread right here. When vol is this cheap, the way I would tend to trade it is I would buy a put, kind of sit on it for a little bit. If I got my move, like let's say you were doing a year-end December, 30 or 31st, 29th put, whatever, and you bought it right now and it was $20, and you got your pullback a week and a half from now, and you got your pullback and we were down 3%. It was a similar week to then I'm selling a further downside put, right? And so on options AI, you can see this, right? So this is, I'm hovering, and it's a we call it like our what if engine, and it would say the rough relative price if you got to move. So in the next 2 weeks, if you got to move down towards 621, let's say 620, this would basically be up 30%, 33%. It'd be worth about $30, that put. At that point, I'm looking to sell maybe a 590 put against it, or even a 600 put against it. And then I've got my super inexpensive, if not free, protection on until the end of the year in case it gets uglier.
CC.
Okay. All right.
Can we break down just quickly here? We only got you for an extra couple minutes. What happens when we get outside these expected moves, like on a stock like Applied Materials? Can you show that stock and the action here? Because I don't know if we're outside it, but I feel like we must be outside. It's down 13%, down 24 points here. What do market makers do when they, you have a move outside the expected move? Is there a scramble, like scrambling around? Are they hedging other ways? Talk about Applied Materials, because it's down at 163 here right now. Obviously, just had earnings last night, and it's down significantly here. What happens when they go outside the expected move?
So what I'm looking at it right now, so I can see the expected move into earnings was about 5.5%, right?
And it's down 13.
Down 13%. And so what that is it's exactly as so here it was 178 was kind of the downside where you would see a defense after hours, right? And you often see that. You'll see, let's say it was that level, the 178. I don't have the 24-hour chart in front of me, but it's possible it might have paused there for a second. And that's the kind of the line of defense of, it's a 5.5% expected move. If I get my gap higher, that's going to be where I'm going to sell. If I get my gap lower, that's where I'm going to buy. And that's not just equity traders. That is the options traders, because what happens is you are hitting that after hours gamma, and especially into an expiration Friday, is if I'm a market maker and I'm long a bunch of those 180 puts, that means when the stock goes down below 180, I have a bunch of stock to buy. So I'm participating in that after hours, kind of shenanigans, right? To your question, once you go through that significantly, you are generally into uncharted territory. And you're not only into uncharted territory as far as like the chart goes, because this expected move probably made sense on the chart, and it did. Like, look at this. It was basically 200 to the upside, and to the downside, it was like 178, which was basically kind of these recent early August lows. So the expected move was based upon this recent last, month and a half's range. Once you go beyond that, you're kind of into uncharted territory, both technically and the options market. And so the options market, when it's caught offsides, it tends to be in a big way. And what you probably have here, Dennis, is you probably have a bunch of people that had sold puts down below, like cash secured puts. They sold as basically as a long, like, oh, I'm never going to get hit down 10%. And now they're getting hit down 13%, and they're selling stock pre-market.
CC Lagator, the founder of Options AI, joins us every Friday in the STN room. But I thought with this being an options expiration, we would bring him on. If you guys want to take a look at Options AI, I'm putting a code in there, STN, Options AI. CC, we love having you on, and I know we're going to have you on again for the Quad Witch in September. So,
oh yeah, that'll be a big one.
Yep. Catch up with you later
Excellent.
on, CC. Thank you
Awesome.
so
Great
much.
seeing you guys.
Yeah, great stuff, CC. Sorry to get you up so early.
Anytime.
Thanks, CC.
Yeah.
Well, we got 8 minutes, but we're actually going to go overtime with you guys here today. Yeah, we're going to go overtime. Yeah, that's Friday options expiration. We'll go overtime here. We're going to give you some imbalance looks here in a second here too. But actually at 9 a.m., we got special guests. We got Eric Jackson going to come on. I reached out to him, talk open door, because I want to know this thesis. I want to know about this company that has the retail community buzzing all over the place. I mean, you look at Open Door, and we've been talking about the stock here on pre-market prep for quite a while, because it went back in July, went from 50 cents to $5, then peeled back, had the disappointing earnings report here. We're going to show the chart here too, Brent, if you can put the chart up there for us there. But it had the disappointing earnings report, pulled back, and then, has now shown life here again. And yesterday blasted off again. So the story is not going away. The retail community likes this stock. It kind of feels like GameStop part 2 here. So we're going to get, the person who has started this buzz here and talking and saying that this company isn't a pump and dump. This is a real company. And he thinks it's going to $82. Now, I don't know anything about that. I have no position in Open Door, but it's going to be exciting to talk to Eric in a few minutes and see what he thinks about it. But we've got some time before Eric comes on here. Lots of other stocks to talk about. Obviously, Applied Materials, which you just mentioned. We didn't really cover the earnings here, so we could dig into there just for a quick second and actually cover the earnings. So Applied Materials reported earnings last night of $248 versus $236, and $7.3 billion versus $7.22 billion. That's a beat on the top. That's a beat on the bottom. So far, so good. Guidance light big time. Analyst estimates are up at $2.39. They're looking at Q4 $1.91 to $2.31, so way below analyst estimates. Sales looking $6.2 billion to $7.2 billion. Analyst estimates were up at $7.33 billion. So it's the beat, and the lower guide. We know guidance trumps all, and that's why you're seeing Applied Materials trade down significantly in the pre-market, down 13%. It's bringing down all the peers. LRCX is trading down 4.5%. ASML trading down 2.2%. KLA 10 Core trading down 5.5% on the Applied Materials report here. Joel, thoughts, concerns? Is this the end of the tech rally here with Applied Materials, or do they just come in and buy the dip?
Well, this stock it was relatively close to all-time highs. Can't really tell you the long term. I'm just going to focus on the short term for you here. Way above the expected move. So you're going to see two different things, possible scenarios here. One is that they're just going to defend that pre-market low. You might not even see that pre-market low. In the example, what was the stock? There was a stock getting hammered. It was the one that our options guest on Monday said, he was looking for weakness, Kava. So Kava, oh man, this thing is just going to crash in the regular session. I'm going to give the 60-minute here. So the pre-market low is at 160.28. So you might not see that level again, right? This was the Kava move after the pre-market low. I can't sell it in the hole down here, but let's see what happens off that opening bell. Especially if you went way outside the expected move, you have 170 puts. Oh, I'm just throwing away money. Oh no, I'm not. They're in the money by $7. They were cheap. So there's your scenario. I see you find some buyers in here. It's just a matter of when.
So Roblox, if you're looking for the news, it is not good news for Roblox this morning. It's trading down 8%. This was an issue that was keeping the stock down like last year. Attorney General files child protection lawsuit against Roblox. Attorney General Liz Murrell's office announced it has sued a popular gaming site in an effort to protect Louisiana children online. We've seen this before. This was a concern. We addressed this with Michael Pachter back when the stock was 50, and he thought the stock was getting past this. It has. It went from 50 to 125, so great call, Michael Pachter. It is down here this morning, though, as these issues do re-emerge. Oppenheimer also commenting here cautiously. They are coming out with comments as well. Just see major near-term risk to Roblox stock is what they said after this lawsuit was filed earlier this morning. So RBLX is trading down here. The stock basically had upside capitulation. Was that off earnings when the stock went from 120 to 150 in like a heartbeat, Joel?
It has to be. I don't know.
It feels like it was running. And sometimes the stocks trend up. Then they have the explosion higher. That's upside capitulation, the exact opposite of the downside capitulation that people often talk about. And since then, it's been a consolidation station. Now you resolve lower. Now you have these people thinking about these lawsuits again and that your children aren't safe on Roblox, bringing all that back up. So I think this story goes a little bit ice cold for a bit.
Earnings were on Friday, August 1st, and they missed. But you know what? We could get a better view on this from Michael Pachter on Monday at 10 a.m. He'll be joining us in the STN room. So roadblocks, it's tough. You see what happened to the stock last time. This is what happened to the stock last time. So if you want to stand in the way, you want to buy the dip, go right ahead. I'm just looking at the previous price action, and I'd be like, whew, wow.
It reignites those concerns. This was the concerns why the stock was trading down, significantly, all of, the last couple of years here. And, these concerns were forgotten, but they haven't obviously gone away. And this lawsuit now reignites all those concerns again that, hey, are my kids safe on Roblox? That's the question. So, and that question still to be answered here. Obviously, stock's trading down significantly on it this morning. Ratings land. There wasn't that many. Friday's usually a slower day for ratings, but there was one that stood out here. Target is getting downgraded to underperform at B of A. Poor Target, never can seem to get anything going here. Just starts to show a little bit of life the last couple of weeks, and then bang. Robert Ohms from Bank of America comes out, downgrades the stock, puts price target from neutral to underperform. Price target $93. Analyst comments, we downgrade target to underperform from neutral, lower our PO to 93 from 105 price target based on 12 times our updated 2027 earnings forecast of $7.75. We see increasing long-term sales and margin risks for Target given slowing digital sales growth, a lack of scale in digital advertising and 3P marketplace, elevated tariff pricing and merchandising headwinds, and increasing competitive threats from Walmart and Amazon. Nothing you really want to hear. So it didn't make me feel all warm and fuzzy to go invest in Target this morning. Now, with that being said, Target's been, it's nothing like this is eye-opening that they've got competition from Walmart and Amazon. We know they've been eating their lunch. So, I mean, you look here at Target, pulling back here this morning. Joel, is this just another dip buying opportunity here, or is Target's story over?
I got a Target story, but I'll save that for the STN room. It's 9 o'clock. We got a special guest to bring on.
Blue Jay fan. Eric, Blue Jay fan?
Hey, they've been horrible for years. They're having a decent season.
Not bad to get on the Blue Jay bandwagon at this point in time. We're Tiger fans, and the Tigers are obviously been doing pretty good too. Hey, maybe the Tigers and Blue Jays will meet up here at some point in time.
I mean, I grew up. It was all AL East, Tigers, Blue Jays. Doyle Alexander. You remember Doyle Alexander?
Oh, yeah.
Foil Doyle.
Oh, yeah.
Doyle. That's what the Toronto fans used to shout at Exhibition Stadium.
It was good. Eric, your mic's just a little bit
light. Reference on this stream. Sorry, guys.
Your mic's just a little bit light right now. If I don't know if you can turn it up. If not, it's okay here too. If you don't know Eric Jackson, a lot of people call you Carvana guy because you made the bold call that Carvana, was going to make the biggest comeback ever here, and it absolutely did. I mean, we go back and look at Carvana. It was a $300 stock, got murdered in 2022, 2023. A lot of people thought this stock was going out of business. You did not. You got behind it, and the stock has exploded back from $3 to $342 here today. So it was a great call by you on Carvana. And now you're making a new call here, and we've seen you in social media, and you've got a little retail army behind you too. Open Door is your new call. Talk to us about this story here, like the fundamentals. Why is Open Door potentially the next Carvana?
Okay, well, 3 years ago, I was on podcasts, Josh Brown, Michael Batnick, Compound and Friends, and we were talking. And so that was in the middle of 22 when all of tech was melting down, crypto was melting down. It just seemed like tech would never come back, like it always seems at bottoms. And of course, they asked me on the podcast, okay, well, what's, name names, Eric, what's a stock that's actually going to come back from the dead? And I gave them two, and one was Carvana, one was Open Door. And actually, I was more confident that it would be Open Door that made the turnaround, but they didn't. They're very similar businesses. One's building an online platform to sell used cars, obviously, Carvana, and one's building an online national platform for selling houses. And in the case of Carvana, they're trying to disrupt the traditional car dealership model and take that margin for themselves. And in Open Door's case, they're trying to disrupt the whole agent model and say, why pay 6% to these people that don't do much and have a much better experience just going through us. And both need a lot of debt to fulfill their strategies. Both were rewarded before interest rates got hiked for just like running flat out towards growth. Damn the losses, damn the torpedoes, and take on as much cheap debt as you need to fulfill this business plan. Obviously, Open Door came out in the SPAC as a SPAC or a D-SPAC. Carvana came out, IPO'd in like 16, 17, something like that. So Carvana has loses less money because you're dealing with cars, so lower price point. So it's a more difficult business model for Open Door with buying and selling houses, and obviously the reason why both of them got smashed and basically were left for dead was that the market lost faith that they were going to continue to live. They thought they were both going to file for bankruptcy. So Carvana goes from $400 in 2020 down to a low of $3.50 in December of 2022. In the case of Open Door, they went from a high of all-time high after they de-SPAC'd of like $39 down to, on June 25th, 51 cents. And so now Carvana, like you said, made it all the way back. It's like 340, 350s now, but it was like it broke 400 a couple of weeks ago after they had really good earnings. And I think they're going to be back there again. So, there are differences. I mean, I sort of pointed out the similarities. I mean, the differences are basically like gross margins are a little bit more difficult. But, what I saw in the case of Carvana was that basically what happens a lot of times in public markets is that like once the story and the narrative changes, people just like leave, forget about the company. They just, and they stop looking at it. Now, if it was like a private company with which these like tech Silicon Valley elites support, and they never have to market every day in the public markets like we see with all the stocks that we trade, it would be different. But these guys in the shadows, they just like, nobody likes to hurt anybody's feelings, so you just like mark it up. So, I think Carvana, got down to sub $1 billion market cap, a few $100 million or something, but they were making changes. They were making progress. They obviously got the message that they had to start making money. And, eventually starting in 2023, they got to that sort of steady state profitability and viability as a business. And they were able to renegotiate their debt and kind of take that risk off the table. So, had they been a private company, they would have, been marked way up, but the public market just didn't care. And the same thing sort of happening with Open Door. Like basically, what has to happen for a major re-rating and for Open Door to open to 100x is that they've got to prove that they have a viable business, which means they've got to prove that they can get to steady state profitability. They just reported one quarter that was their first EBITDA positive quarter in 3 years, so that's a start. But they've got to like prove it now continuously. And then secondly, like the other thing that the Open Door playbook is, they don't make Carvana doesn't make most of their money or hardly any money from buying and selling the cars. They make it from finance and insurance. And then they make it from other stuff that they package around it. It's a platform. It's not an app. And what that means is you sell other stuff when you sell this thing. It's not just one thing. You're not just selling margin on cars. It's like everything else you can sell around it. And that's where they make their money at scale nationally. And that's what Open Door has to do. They have to get beyond just iBuying. They can probably, be more efficient and, cut costs in their own business, make some money from iBuying, but they got to sell mortgage and title. They've got to get into AI. They've got 10 plus years worth of great data about the US, real estate market. They could be like the Bloomberg of that data, selling it themselves. They don't even need to partner with an OpenAI or a Palantir. They could do it themselves if they actually hired some smart people. So there's just like multiple.
Well, speaking of that, I'm going to interrupt you here because at breaking at 9 a.m., and you probably know it, your phone's been dinging in the background here. You've been calling for new leadership here. And unbelievably, live on this interview, Open Door announces that Carrie Wheeler is stepping down and the company is beginning a search for a replacement. You've been calling for this. So Open Door announces CEO search is well underway here. Breaking news here. I mean, something you've been calling for here, Eric. What are your thoughts as Carrie Wheeler going down? So now, maybe we do get some new leadership that this company absolutely needs.
That's awesome. I didn't know. That's amazing.
That's why you got to listen to PreMarket Prep.
I'm so glad I hopped on the live stream to experience this live with you guys.
That's awesome.
There's not one single thing that could have helped this company more than getting her out the door. Like it was ridiculous. Her performance a week ago or whenever it was on that earnings call was just horrendous. She's obviously like a corporate finance robot. She's not the person to run a tech company and build a tech platform. And I had all these whiners on like Discord server. Eric, you're being too mean. You got to be nice. You're going to tank the stock price and all this kind of stuff. I'm like, are you listening to this person speaking and like describing what she plans to do? And has she ever articulated a plan to get this thing to $82? It was ridiculous. And then she like the whole song and dance that she was going to go and do an interview with Anthony Pompliano on Monday and stuff like this. Anyway, she's in the past. I think what needs to happen now is Keith Raboy, who's the guy who actually wrote the original business plan for Open Door, is like, I think he's the smartest guy in tech. He's got to come back on the board. He probably will bring Eric Wu, who was also a co-founder of Open Door and was the first CEO before Carrie. And they got to pick a CEO. And I trust people like that to pick the right tech-focused, product-minded, Ernie Garcia type. One thing about Ernie Garcia, which I think it's worth pointing out, when his stock was going from $400 to $3.50 in 2022, Ernie Garcia bought $70 million worth of Carvana stock on his own dime. Now he's a rich guy, but $70 million is not couch cushion change. And, he put that at risk. He believed in it. And he had 2 guys on his management team, one who bought $2 million worth of stock at $7.50 in Thanksgiving 2022. And he's the chief product officer. Like, guys like that never make big open market purchases. And some other guy bought 700 grand of Carvana stock. So these guys like put their money where their mouths were. And we need the same thing from Open Door. Carrie and everybody else on this board have just been selling, dumping shares on retail. It's like, it's ATM money, free money, found money. We got to get an founder's mindset back in this company. And this thing can go to 82 and then 200.
I don't know if you noticed, last night 13Fs came out. Paul Tudor Jones actually took a position in Open Door here too. So you're getting some like names behind you here now too. I mean, it starts with, a retail community here, and obviously you're well followed in the retail community. But Paul Tudor Jones is not like a little retail trader. This isn't, a gun here. So it looks like he took a position in this too. And the stock's up 15% right now. So they are liking that Carrie has stepped down here. So just thoughts here as you get some real backing here, with Paul Tudor Jones coming in.
We could be in for another God candle today. This thing,
God candles.
Nothing that makes guys more excited than God.
What's a God candle? Just a big blast off.
That green candles to the sky. It's more exciting than any Sydney Sweeney ad for sure. So I think the Paul Tudor Jones thing. That's important. One thing that's important to point out though is that when we see like Buffett bought this and Paul Tudor Jones bought that, that's for the Q2 quarter. So that's ending June 30th. And it seems like this Open Door campaign's been going on for months, but my first tweet about it was July 14th. So basically like, at the end of June, like June 25th, Open Door was a 51-cent stock.
Yes.
At 56 cents, Carrie was selling a bunch of shares at 56. Like who does that?
He's not a very good trader.
In the past. Well, she obviously thought it was going to 25 cents. That's the only reason why she was unloading at 56 cents.
Yeah.
Anyway, I just think like there's a lot of buying that's happening now, I'm sure, by big institutions this month of July, but they can't, they won't have to show that until the end. So Q3 will end in September, and then they won't have to report
45 days.
Yeah. So we're talking November 15th?
It'd be October 15th, I believe. If Brent would know that in the background, he covers it.
45 days after, right? After September 30. So it should be.
Yeah, exactly.
November.
Oh yeah, you're right. No, November 15th. You're correct. Yeah, 100% correct.
So it's like still a long. We're really not going to go what's happening in real time until then, and basically Thanksgiving.
Give us your intentions for this stock, because are you just holding? Because some people are saying, oh, it's a pump and dump. He's just pumping it up. But I think a pump and dump is like, you actually got to dump the shares. You're not intending to sell these shares, are you? Like anytime soon? Like you're saying $82. I mean, $82 is a long ways away, but this isn't like something that's going out here to like, I'm buying a whole bunch of stock and the retail frenzy, I'm going to sell into that. You aren't looking to sell shares.
I mean, like we got Carrie stepping down. We're going to get some new hotshot CEO who actually knows something appointed as CEO relatively soon, probably a reframed board. And there's a huge, I don't know, it depends who you ask. There's like 23% short interest or something. Why can't this be a legitimate, GameStop type squeeze? Why couldn't we get to $82 this year? I mean, I don't know. Like it's just GameStop wasn't a real business. It was a crappy little business. Like all these meme stocks are always terrible businesses that I would have no interest in ever touching. This is a legitimate Carvana style turnaround. Carvana was never a meme stock because Carvana was just ignored. I don't think I ever heard anybody say anything positive about Carvana until it got up above $300 a share. This thing has a chance to re-rate from 50 cents or, I got in like, I don't know, 80 cents or something like that. Now we're at, what is it today now? 360. I mean, this is the equivalent of Carvana at probably $30 on the road to 400. So we're still early days here in a legitimate turnaround. And, how fast it goes, I don't know. Like, I mean, my $82 target was originally for 2028, assuming this thing like just did a Carvana in the shadows kind of improvement, tightening the screws, adding more businesses, more revenues and so forth. But with all the focus that this has, and by the way, it's international. It blows me away. Somebody tweeted me last night that they were buying shares from Antarctica. I didn't even know you could buy shares down there in Antarctica.
I didn't know there's anybody in Antarctica. The penguins.
I mean,
the penguins.
I thought they did cruises down there. I mean, maybe it's those like researchers. They're studying the end of the world or something. It's trading stocks.
Eric, we're on the line with Eric Jackson, EMJ Capital, joining us here on a pre-market prep special interview. Eric, when you're putting together your thesis on things like this and, drilling down on the fundamentals, and you see things like rocket companies buying Redfin, that is, a comparable company. Talk about the competitive advantages that Open Door could possibly have over Zillow Group, and Redfin Rocket combination.
Well, I think those are all good companies. Rocket's in your neck of the woods, obviously. They're in Detroit and Windsor, big presence. And Dan Gilbert's a great guy. Isn't it interesting that two mortgage guys own two NBA teams? Kind of tells you something about why Open Door should probably get in the mortgage and title business themselves. But I think one of the interesting things that Keith Raboy pointed out on a podcast a couple of days ago was that I think he said something like, real estate is like a $2 trillion asset class, and yet the largest real estate platform company, e-commerce type company, is I think he said Rocket was like, I think he said something like $18 billion market cap. I'm not sure if I got that right, but like basically it's puny in comparison to the size of the real estate market. So it's still like wide open, I guess, is one part of the answer to your question about like who's going to take the mantle. Keith was saying like somebody should emerge. There should be somebody who's like a 50 billion, 100 billion, 150 billion type market cap company, given the size of the market that they're going after. So it might be Rocket. They're well positioned. Why Open Door though? I mean, I think like Open Door is really trying to take this sort of disruptive approach of like cutting the agents out of the equation and building from there, using that as the starting point. But then because it's a platform, like all the other businesses that they can layer onto it. The other thing that's interesting about them now is that they have the market for iBuying to themselves. Like Zillow got out of that business because they were losing too much money. And they had a core business like advertising that they could fall back on. Redfin got out of that business and they went back to brokerage and stuff. And so it's kind of like Coinbase in December 2022. Like the government forced all these other players like Kraken and Binance to get the hell out of the U.S. market. And they if you had to sort of make a bet, like is anybody going to ever trade crypto again? Maybe a little bit. Well, if they do, Coinbase is going to make a lot of money. And so Open Door has that sort of iBuying starting place. They can then kind of layer in all these other businesses. They can go international. Again, like I'm getting the Antarctica guy didn't want Open Door to expand down there, but I got people telling me like, we're in the UK, we're in Netherlands, we're in Germany. We're sick of this like real estate cartel that operates in our country. Can you send Open Door here? And then like you hear like crickets from the Open Door management team in response to this retail uprising. So there's just like so many levers that they can pull, and if they can really kind of get back to their founder DNA and people that kind of know how to build out a Carvana-like platform, I think world's their oyster.
Eric Jackson, thank you so much for joining us here on Pre-Market Prep. It's great to have you on, looking at the fundamentals, discussing what's going on with the stock. If people want to, continue to, to follow this story with you, what's the best way for them to do that?
Best real-time way is probably Twitter or X. So follow me at Eric Jackson. My website is emjcapital.ltd, like limited, and but you'll get all the latest insults towards. Well, hopefully there aren't going to be many more insults going forward because with this change of leadership. But
nice.
Follow me on X.
Okay, don't get mad at me, but go Tigers.
All right, I love the Tigers. Love Detroit. I love the people of Detroit are some of the hardest working, best salt of the earth people in all of North America. I have a sister-in-law who like grew up or lived in Windsor forever, and Windsor and Detroit are kind of like tied at the hip. Same people, same good stock. So love you guys.
All right, thanks
Eric.
Eric.
Appreciate it.
Yeah.
That was fun. That was fun.
Oh, it was interesting because the breaking news right at 9 a.m. So just to recap the breaking news, which Eric has been calling for. He's been calling for CEO Wheeler to step down. He actually gets that. They are well into, so right now the CEO stepping down. Miss Wheeler will act as so we're looking here. Carrie Wheeler, Open Doors Shares, has made the decision to step down from her roles with the company, also effective immediately. Board has elected Eric Fetter, president of Lennar Homes Strategic Investing Arm, as lead independent director. So the CEO search, succession search, is well underway here. It's an interesting story. And I mean, what about the stock here, Joel? Maybe you should break down the technicals really quick here for this stock, because obviously, this has been, some people are calling it the next GameStop. Maybe it is, maybe it isn't. But the story's not going away. I mean, usually you see these things go 50 cents, $5, then it fizzles out, people forget about it. But it's been reignited here today. And maybe today is the day. I have no position in Open Door. Maybe I should take one because, with this new CEO, Eric seems pretty convicted that this company is a turnaround story, not just some pump and dump. Which, is, it's interesting. It's an interesting story. And I mean, the retail community gets behind something. We saw what happened with GameStop.
Yeah, I think, did you, were you playing this like in just for overnight trades, like in the
we've been trading.
Yeah, overnight trades. Then you sell
now.
it. You sold it too early. I'll just give you an area. I'm just going to give you, I'm just going to go to retracements and, fundamentals are the fundamentals, but had a big break, got up to, what was it? That $5 level. Remember that $5 wall, 497. You had a break down to 170. So can the Bulls grab control here at the 340 area? But Dennis, it's 9 minutes before the open. I don't want to be responsible for you not having a good open. We got to wrap it up here on pre-market prep.
Yeah, because we got option expiration too. So we're going to wrap here. Options, we're going to see some movement here. It's option expiration. Get ready for some volatility.